Welcome to Trading Lounge and the Australian report. However, I'd like to start with the S&P 500 for the simple reason is that we're very close to a top being in place, and once that rolls over, then we can expect some pressure to come across the globe in other indices as well. So just in a nutshell, from wave 2 here all the way up to wave 3 here on this daily chart, we've been counting our 5-wave structure up here, and we've also been counting our little 5-wave structure up here as well. So we're expecting this to roll over shortly, and the wave 4 of one lesser degree is here. The 38.2% retracement level is here. So a correction all the same as well. And in terms of a classic trading levels pattern, we would see the arrival, the reaction here in 3 waves, and then we would be looking for 5 waves to the upside here, and then the larger ABC pattern to come into play here. So this is the arrival, the reaction, the first high above the level in 5 waves, and then we'll be looking for a corrective pattern to come into play here. So yeah, with that in mind, looking at the Australian market, because it's pushed up a little bit higher, and I need to chat about this as well. So first of all, with this triangle, I like this triangle pattern. I mean, it's complicated, but it's kind of the best fit, and we do have 5 waves down through here, and we have a reasonable A, B and C, and A, B and C for the D wave here, and then for this market here we have little A, B, C here for the A wave, the B wave, and then we're looking for 5 waves up into this space here. I have seen the E wave before in triangles take out the top of wave A here, and even if the triangle was going up the other way as well, so if the triangle was like this here, then the market moving up here, and it'd have the A, the B, the C, the D, and I've seen the E drop out down here and basically just, suck everybody in and then push up through here. So this is the same in reverse here, taking the top out here, luring everybody in and then moving back down here. So we just need to be a little bit mindful. So I can admit that I'm wrong, and that's not the problem. The problem is that we need a setup to go long. So the setup would be this here little classic trading levels pattern. So basically we'll see the arrival, and we're kind of expecting it to sort of move down from that point. If we get the first high above the level here, then it takes a lot of energy to do that, and then then we would see it fold back down and so on, and then build back on support, and then we would go long at this point here. So to get this set up here, we need patience to get our timing to correct. So we're not going to miss anything, but we do have to allow the market to play these 5 waves out, coming up into this E wave from wave B here to wave C here. Okay, so there is a case for it to push higher when we look at I'll just go to a different charting program. This is the trading levels charting program, and this is the banking sector. And with the banking sector, I've mentioned before that that this here could be construed as an A and a B and a C wave here for a corrective move, and then starting an impulse wave to the upside that would take these highs out here. So I'm aware of that. This move down here can also be counted as a B wave here, and if that's the case, then as I mentioned before, we would look for 5 waves up here as a C wave, and then fold over. But this still will take a long time to move up here. So 1 and 2 and 3 and 4 and 5 to come into play here with this market as such. So this will come in roughly to these old highs here, react from that point, and then this move here. But from that point there, it can also start to move down from from here as well. So we need to be a little bit mindful of that. And then this here would be down for one, an A and a B and a C wave here, and then continuing down. But this 5 waves up here is quite a confident, sort of pattern that we need to acknowledge and also to trade as well. And in terms of that, we've been talking about A and Z, and with A and Z here as well, it's a little bit the same in that from this low here I can count 1 and 2 and 3 and 4 and 5 here. Okay, there is an overlap in this structure here, so it could make this an A wave and a B wave and a C wave to here being corrective. So yeah, a bit of, I don't know, yeah. Anyway, it could be both ways really. This move down here makes a nice A wave, B wave, and 5 waves down for the C wave here to 61.8%. This move up here we've been monitoring, which appears to be 5 waves up here, and we didn't go long here, we're just waiting for it to react. We would have had this sitting on this high here and then bringing it down to these highs here, and that's pretty much still the same case here as well. And we had talked about going long in here but keeping the stop at this point here, but even so here, what will occur here, the good thing about this here is that if this is 5 waves here, then we should see, and after this ABC here, we should see an equal 5 waves coming into this play over here. So this little move up, this is 5 waves up, this is a corrective wave down here. It's in 3 waves, whichever way you count. It's not 5 waves, so it's corrective. So we should be taking a top out here, okay? What I wanted to wait for was I wanted to wait for 5 waves up here. There'll probably be another little move higher above here, but we should see a move back down from here. Okay, so that move back down from here is basically what we're looking for in a corrective wave, and then we can start looking to move in this space and in this space here. So this little move up here is basically 5 waves as well, moving up here, much the same as the ASX 200. So we need to be a bit mindful here. So look, we're long in Macquarie Bank, but for different reasons. They're kind of like a horse in their own race, but ANZ and Westpac are kind of in the same pattern here. CBA is different, and the other second tier banks are also completely different wave structures as well. So I'm using ANZ, and I could have used WBC here as well. But of course they'll all sort of move together in their own way, but they certainly have different counts. Point being, there could be a bullish count here, a bullish setup, and we would have to take it, okay? Coming back to the ASX 200 here, just bear with me here. So if this continued up with like A and Z and so on, we'd be looking for this pattern here. So we've got a week to go within this area here, but we also know where the S&P 500 is, and expecting that to roll over very, very soon as well. So on the 4-hour chart here, and really we're just focused on this last structure here. So from wave D here, I'll just bring this down. So from wave D here, we nailed this out quite nicely as an A and a B and a C here, and then the B wave back down, came down past the 61.8%, but we haven't really worried about the 61.8% in this triangle because we knew early on that we were moving through those target levels, so we knew that it was vibrating differently. The move up through here counts here as 1 and 2, and then wave 3 up here, wave 4, and then going for wave 5 up here, which is 1 and 2 and 3 and 4 and 5 here, not finished yet. And on the hourly chart we can pretty much bring this down here. Now the other thing too is that I didn't see Thursday as a bear day in our bullish weekly cycle. So Thursday didn't really present a bearish day. So that sort of raises flags for me that there's a change in the trend. So because if Thursday was the bearish day, then we'd see Friday and Monday be the bullish days. It was kind of bearish in some degree, and in the morning session, but it wasn't a normal Thursday like the previous Thursday. So yeah, we just need to be careful. But also to here, yes, we have moved across this trend line coming through here as resistance and then support here. So that is a positive thing. We've also got this number here, 5.8, which is really significant. 8's a number that traders, not that it's a lucky number 8 or anything like that. It's just it's an even number which carries more weight than an odd number, unless an odd number is a whole number, like $5 or something. So it's it's a profit-taking number, and we've seen that before back over here, and so on. So if I count this here as 1 and 2, and all the way up for wave 3 here, wave 4 here, then we've got 1 and 2, and then up for the third wave here, the fourth wave here, and I still see this as 1 and 2 and 3 and 4 and 5. So I still see it touching on the 5.8 here today, and then being weak from that point and rolling over from that point there. And like I mentioned before, if we get support here, which is basically just sort of walking up the steps in a sense, so like here, the arrival, the reaction, first high above the level, the support here. So if we get something, if I can see a corrective pattern come back in here after we touch here, and then we'd push up here in 5 waves, not making support on top of 5.830, because if we get support on top of 30 here, we have to trade long from there, not just trading above it, but we need that first high above there, and when we get this, when this correction normally happens at 30 here, normally you would see a push down to the 20 here. But what you don't want to see is 20 as a retested resistance, because then you know that the market's going to be pulled back down this way. So the 2 and the 3 are very important here. This is the dividing 3. This just tells you that support on 3 would tell you that you need to be trading long again. But until that comes in, that time, that tested support, and you set up, then you don't, because you're just exposing yourself to unnecessary risk and loss. And loss is okay. The thing about loss is just really the time it takes to recover that. So look, yes, the arrival, the reaction, the first high above the level, and then a corrective pattern here, and then these here become our sort of entry points to do it, to go long in that sense. So we'll do that. So yeah, support on 5.830 is a trigger to continue to go long. Otherwise, we should expect this pattern here to unfold, and then this will help us with our timing here. So in terms of trading, you trade to here, get out, and wait for the setup over here. So you don't really want to get involved in this here, because it's just short term here. Okay for scalpers and so on, yeah. Right, so that's really all I really needed to say on this, and comparing it to the US market. So thanks for tuning in. Cheers.